Now it's official. It's official. Good morning, everyone. Colleen Murdoch with the Greater Tiffin Chamber of Commerce. We're really excited to continue on. This is our second installment for the small business series. This series is really designed and geared to help these small business owners with tips and tricks to deal with some of the everyday issues that you have to deal with. We know that not everybody is a master of all things. So we wanted to present some resources to try to make your life a little bit easier. And we are thrilled to have Mark LaCroix from LaCroix and Associates here to talk about bookkeeping and taxes made simple. Not sure how to make taxes simple, but we're gonna let Mark kick it off and share some of the wealth of knowledge that he has.
Great, thank you. Let me share. And then we'll start right in. So good morning, everyone. First, I want to thank you all for being here today. It's wonderful to see such a great group. My name is Mark LaCroix. I earned my MBA at Boston University. I live and work in Ipswich, Massachusetts. I'm the founder of LaCroix and Associates, founded in 2023, where we focus on delivering tailored tax and bookkeeping solutions. Over the past 20 years, I've had the privilege of helping individuals and businesses navigate their financial needs with confidence. I hold a level 2 certification as a QuickBooks Pro Advisor and a registered IRS enrolled agent, which allows me to represent clients directly before the IRS. Look forward to sharing insights today that can help make your financial processes clearer and more efficient. What I'd like to do now is if we just take 30 seconds, go around the room so everybody's on the same page with who's here, what kind of businesses. We start with you.
Sure. My name is Ellen Fusco. I'm the owner of Moving and Shaking in the North Shore. I do move management, downsizing, decluttering, and I've been living in Rockport for the last year, just over a year, and this May would have been a year.
We need to keep it to 30 seconds.
Yeah, that's fine.
So we put it
That's
in,
fine.
so,
My business has been I've been in business for 6 years. My experience with bookkeeping and taxes is I use QuickBooks, but minimally. I
okay,
have my own system and I would love to learn more.
great. Mona?
Hi, I'm Mona Faherty. I have 2 small hotels, the accommodations at Rocky Neck and the Sea Lion Motel, both in Gloucester.
Great.
Tracy Bowen, CB Fisk Organ Builders out in Magnolia.
Steve DeMann, I run Steve's Rope Placing down on Harbor Loop. I do a lot of rope work and bait shop now as well.
Jill Montoni, local Keller Williams Realtor and mixed use building owner. Self-employment. Have always had some side self-employment.
Christina Wilcox, Rockport Candle Company in Rockport. Joanna Lima with Sassy Square Marketing, and I also use QuickBooks Online.
Great. And Colleen, could you?
We can go
let's go
online.
online.
Yeah. Kimberly?
Good morning, it's Kimberly Voltero. I own the Emerson Inn in Rockport, and we also use QuickBooks Online. And I'm trying to determine how we can get outside help and what's appropriate. So I'm interested in that.
Okay.
Laura?
Cape Ann Motorin in Gloucester.
Joanne?
Hi, Good Linen Studio in Gloucester on Main Street, and we also have QuickBooks.
Andrew?
Hi, I'm Blessing. I'm representing Andrew of Shomography Companies. We would like to understand QuickBooks more and how we can better implement it in our business.
Great. Everyone? Is anyone I missed? I think we got everyone. Fine.
Okay, we just had somebody else that walked in here. Can we get your name and your business?
Yep, I'm Lindsay Egan. I'm an attorney in Manchester. I own Poppy Legal Group. I do estate planning and family law. And was there another,
No, no,
Okay.
that's perfect.
good.
So we
So
want
I
to do,
apologize for being.
no, it's fine, it's fine. We're just starting.
Don't do it again.
It's fine. Yeah, okay, we'll keep going. Um, Creating house frozen. Okay, let's start with a quick overview of what we'll cover today. First, let's talk about why bookkeeping and taxes matter. It's not just once a year at tax season. It should be an essential part of running a strong and healthy business. This session is interactive, but time is set aside at the end for questions. We'll review some practical tips you can take away and start applying immediately. So you should leave here with useful, real-world strategies you can put into action right away. So let me ask, what brought you here today? We have 15 to 20 minutes set aside at the end of the presentation, and I hope to review a lot of questions at that time. Okay, so what exactly is bookkeeping? At its core, bookkeeping is systematic reporting of financial transactions, every dollar that comes in and every dollar that goes out. By keeping detailed records, you'll be able to track your income, expenses, assets, liabilities in an organized way. This gives you a clear picture of where your money is going and how your business is performing. Bookkeeping also serves as the foundation for both financial decision-making and tax preparation. Without accurate books, it's almost impossible to make smart business choices or file your taxes with confidence. In short, bookkeeping is more than just paperwork. It's the backbone of good financial management. Let's pause for a moment to review some key concepts. Income. This is simply the money that your business earns, whether it's from sales, services, or other sources of revenue. Next, expenses. These are the costs that incur to keep your businesses running, things like rent, supplies, wages, and utilities. And finally, a depreciation, a question that I get a lot. This is the gradual reduction in value of assets over time. For an example, if you purchase equipment or a vehicle for your business, you don't deduct the full cost right away. Instead, you spread that cost out over time, usually several years, as the asset loses value. Keeping these three concepts clear, income, expenses, and depreciation, is your foundation for understanding financial reports and making informed decisions. Okay, let's look at an example profit and loss example. In this example, last year, it was $9,000 in income, and this year, income is up roughly 20%. On the expense side, we saw growth as well. Supplies, wages, auto expenses, healthcare, professional fees, they all rose slightly, each tracking in line with a higher level of business activity. When we put it all together, our profit increased from just over $1,300 last year to $1,500 this year. So while expenses are up, income grew at a stronger pace. This leaves us at a healthier overall position and shows positive year-over-year growth. Okay, here's an example balance sheet. Every balance sheet tells a story, and it starts with three key parts: the assets, liabilities, and equity. So assets are everything that your business owns. Bank accounts, cash, equipment, inventory. Liabilities are what you owe: credit cards, loans, unpaid bills. And equity is what's left over. It represents the ownership stake after debts are subtracted from assets. So in short, assets are your resources, liabilities are your obligations, and equity shows your value. Understanding this trio is essential to knowing where your business stands. Okay, we're going to go over some 4 scenarios and giving the experience that people in the room, these are more simplistic scenarios, but it's good to review them. Okay. This first scenario is someone that doesn't keep any records and doesn't have any tools. Actually, this is kind of a common client that I work with. So, and it's actually who I thought was going to be showing up today. We don't seem to have a lot of those here, but one of the biggest challenges we see at tax time is the business owner who keeps no records all year and then scrambles last minute to pull things together. Not only is this stressful, but often leads to missed deductions and errors. Getting organized doesn't have to be complicated. Starting simply by using a monthly checklist, just a quick way to make sure that income, expenses, and receipts are tracked regularly and can be remembered at tax time. And that's key. Just as the year goes on, you want to remember things at tax time. You don't need to invest in pricey software. There's free online tools that can handle invoicing and basic bookkeeping. Instead of stuffing receipts in a shoebox, we used to do 30, 40 years ago, we can save them digitally. You can save the picture on the phone, store it on the cloud. And if you're not already using a spreadsheet, you can track it in a spreadsheet. Just with these small steps, tax time stops being a nightmare and becomes a smooth, predictable process. Example number 2 is someone who's already using a spreadsheet. So let's talk about a common challenge that many small business owners face: tracking finances manually without a clear structure. While spreadsheets offer flexibility, they can quickly become chaotic if not managed properly. Our recommendation is a simple but powerful. Use consistent categories, whether it's income, expenses, or inventory. Having standardized labels that helps you stay organized makes analysis easier. Second, reconcile monthly. Set a recurring time to review entries and match them against bank statements. Catch any discrepancies early. This builds a financial competence and accuracy. And it's really key to look at your bank statement every month. There's a lot of business owners who are too busy. They only look at bank statements at the end of the year. It's really helpful to look at it monthly. So if something's unexpected or unexplained, you can do the research while the transaction is fresh. Finally, add formulas for totals. Automating calculations like monthly revenue and expense summary saves time, reduces errors. Even basic formulas can turn a messy spreadsheet into a smart financial tool. Just these steps, your spreadsheet becomes more than a tracker. It becomes a strategic asset. Okay, example 3. A QuickBooks user that's not really understanding everything that QuickBooks is doing. Many business owners use QuickBooks but struggle to make sense of it. Starting with a free tutorial could help. QuickBooks offers plenty of beginner-friendly resources that demystifies the basics. Next, you can focus on key features like invoicing, expense tracking, and reporting. These areas can drive real value for your business. Finally, setting up a monthly review routine, just 30 minutes a month can help you stay on top of your finances and make smarter decisions. QuickBooks doesn't have to be intimidating. It just needs a little structure and a little practice. Okay, example number 4. The tax preparer does everything. This slide highlights a common situation. The business owner hands everything over to the tax preparer at the end of the year, and that's it. No check-ins, no ongoing tracking, no monthly review, just a big data dump in March. The problem with this approach is it leaves the owner disconnected from their own financial story. They're missing chances to make smarter decisions throughout the year. So what do we recommend? Keep monthly summaries and do monthly reviews. Even a simple spreadsheet or QuickBooks report can help you stay informed and make tax preparation smoother. Second, ask for mid-year check-ins. A quick meeting in the summer can uncover savings opportunities and avoid surprises. Simpler businesses, a 1 year check-in is fine. More complicated businesses where income and expenses are fluctuating, you might want to have several check-ins. 2 or 3 check-ins in between tax season. And finally, understand what the tax preparer is doing. You don't need to become a CPA or a tax expert. Just knowing the basics empowers you to ask better questions and take control of your financial structure. Okay, bookkeeping just isn't about staying organized. It's the foundation of accurate tax filings. When your records are clean and consistent, the tax return reflects the real story of your business. Good bookkeeping also helps to avoid penalties and catch deductions you might otherwise miss. That's real money saved. If you ever face an audit, solid records can make the process far less stressful instead of scrambling, and you'll be prepared. Bottom line, bookkeeping isn't optional. It's your best defense and smartest strategy against tax time. Okay, this slide helps clarify a common point of confusion, the difference between regular season and tax extension season. The regular season ends on or about April 15th. That's the standard deadline for filing your return and paying any taxes that are owed. If you need more time to gather documents or finalize your return, you can certainly file for an extension. It's very common. This moves your deadline to October 15th. But there's a catch. The extension is more time to file. It's not more time to pay. So any taxes that are still owed when you finally submit your return, interest and penalties will be calculated back to April, not to the time that you file. This is a common error. This common misconception. I hear it all the time. Interest and penalties are calculated to April. So you want to have as much paid in by April as you can and try to avoid any late payments. If you're considering an extension, make sure that you estimate and pay your taxes by April 15th to avoid penalties and interest. You pay. OBBB, the one big beautiful bill. This bill introduced major changes to our tax code, changes that every taxpayer needs to understand. From no tax on tips and overtime pay to car loans interest becoming non-taxable, these updates shift how income and expenses are treated. It also makes some Social Security income tax-free, which affects millions of retirees. The key takeaway isn't these specific benefits, it's the importance of knowing what's changed. Staying informed helps you file accurately, avoid surprises, and make smarter financial decisions in real time. This slide is all about helping people understand the one big beautiful bill could affect them personally. Service workers and seniors, the bill could mean lower tax bills, but only if they know what's changed and how to take advantage of it. The one big beautiful bill introduces lots of deductions, not just the ones that I mentioned. These can lead to savings, but again, only if the deductions are properly claimed. That's why it's important to keep good records. Without documentation, these benefits could be missed entirely. Takeaway here, again, isn't just the specific credits that I mentioned, it's that you stay informed, and are able to unlock the value of the new bill. The one big beautiful bill, I've spent 3-hour seminars on it. I can't go into it in a lot of detail here, but if you're curious about it, I encourage you to do some research on it.
When is it effective as of? This year?
So it's complicated. So different parts of it are effective at different times. Some of it goes back to the beginning of 25. Other things don't come into play until 26. And some of the things that are introduced actually end in 2028.
Oh, okay.
So, but good question. As we wrap up, here are some final tips to keep your finances on track. And regardless of whether you're just starting out, whether you're doing it for a while, when you're a seasoned expert, these should be helpful. You want to review your bookkeeping monthly. Don't let things pile up. It's easier to catch mistakes and stay organized when you check in regularly. Second, use tools that match your comfort level. Whether it's a simple spreadsheet or accounting software, the best tool is the one that you actually use. Third, stay informed about tax law changes. Even small updates can impact your bottom line. And finally, ask for help early and often whenever you need it. Don't wait until tax season. The experts are really busy during tax season, and they simply don't have the time to answer your questions when they've got a full desk of work to do. So a little guidance now can save you a lot of stress later. I just want to leave this slide up here because this is really the whole focus of the program. And my next slide is actually the last slide. So before we close, I'm going to open the floor for questions that you still have. Whether it's bookkeeping basics or tax strategy, now's the time to ask. Remember, the goal isn't to survive tax season, it's to make bookkeeping and taxes simpler. You don't have to do it alone, you can always ask for help. If you'd like to connect, my name is Mark LaCroix. My information is on this slide. I'm here to help and stay informed, stay organized, stay ahead. I'm going to leave this slide up for a minute or two, and when we transition to questions, we'll take it down. So that's the end of the presentation. Colleen, do you have anything before we transition to questions?
No, just, the idea is to, for whatever specific questions and, situations that you have in your own business, to whatever extent Mark's able to, give you some advice on a case-by-case basis. But I think it's great to be able to ask some questions because there's a good likelihood that somebody else in the room or online, has something, run into something similar, so.
And so with that, I'm going to stop the screen share and so that we can see everybody online. Let's see, stop sharing. Okay, we still have a bunch of people there. That's great. So hopefully, you do have some questions. I'm hoping this to be interactive. We've got 15 or 20 minutes to go through. Does anybody want to start?
I get one. Okay.
Oh, great.
About the no tax on overtime.
Right, very
A lot of
confusing.
people ask me about that.
Yes. So what I'll say about that is they're not changing the withholdings. Okay, and the no tax on overtime. So the way it works across the nation and in Massachusetts, a regular work week's 40 hours. Suppose you work 41 hours. Depending on your industry and your business, that 41st hour is supposed to get time and a half pay. I know not every industry does that, but it's the half. It's the overtime. So it's so time and a half. You still have to pay tax on the time, but it's the half that's going to be tax free. And it's not handled on the withholdings. It's going to be handled on a separate form during tax time. So you're not going to benefit from it through the year. You'll get an additional refund at the end of the year.
Okay.
Okay.
So the worker needs to keep track of what is the overtime and
Payroll needs to keep track of what's the overtime. And it'll be, so in this, because this is a big change, they're not really sure if the payroll company is going to be able to adapt and pay this information. So they're going to put something like in box 14 on the W-2.
oh, okay.
But for 2026, and they're gonna get the W-2 for 26 and 2027. There are a lot of proposed changes for how the W-2 looks, like 18 months from now.
So it doesn't go into effect for 2025?
It does go into,
It does,
it
but it won't
it
be on
goes
the
back to
W-2.
January 1st, 2025. This is really a payroll company change that they need to track
Okay,
and provide that information on the W-2. And so when the tax preparer is going through doing the taxes, they're gonna be getting this information from the W-2.
Mm.
That's a good
thank
question.
you, thank you.
So is the onus on the employee to,
The onus is on the employee to make sure it's correct. So if they look on the W-2 and they receive it at the end of the year, they'll be, like I said, some box is gonna say how many dollars they earned in overtime. The employee should kind of review the records, say, yeah, that's about right. If there's no information, obviously they want to bring it up, ask the payroll employer, hey, can you provide this information? And just make sure that the tax preparer has that information, because if they don't provide it to the tax preparer, they're not gonna get the credit. Yeah.
Thank you.
So, yeah, the ultimate onus is always on the employee. The onus is ultimately on the taxpayer. So if the employee wants their taxes to be accurate, this is something they should be aware of and make sure it's correct.
You mentioned receipts and the benefit of using the QuickBooks Online is that the receipts are stored digitally. Do we have to keep a physical copy of the receipt?
Thank you so much for that question. So every year, even the clients that I've reviewed this answer with before, they still give me receipts. People think, oh, receipts are for paying taxes. Actually, it's the summaries that the tax preparer uses. So I don't want every little utility bill that you paid. I just want to know, what did you pay utilities at the end of the year? So the receipts are helpful if you get audited, and less than 1% of returns ever get audited. So there's not a lot of audits out there. It can be painful if you're not prepared, and people that go through an audit and it's very uncomfortable, they tell everybody they know. But if you're organized and you're reviewing your things monthly and you keep things in a special location, so if anybody asks detailed questions, you know where to go. It tends not to be painful. It's not that bad. But the individual receipts, yes, QuickBooks has a spot that you can upload the receipts if you want to, but it's not required.
But then after we upload it, can we toss the paper? If we get audited, will they accept the digital version?
Yes, they'll accept the
Okay, I
digital
heard that
version.
they did not.
Yeah.
Do you
So-
scan all of them in?
I scan them in and then I also keep them.
Yeah, I keep all mine.
Right.
Like,
And in addition to that question, most of the time when you order something now, it's pretty much online. You don't really get a receipt.
You
Right.
usually do get a receipt? Well, I'm sorry.
Yeah, no,
You'll get like an emailed receipt, right? But you don't have a physical receipt, like with a bunch of,
right. So let me rephrase my answer, because I don't want people coming back to me 5 years, 7 years. Oh,
remember when?
right. So the IRS answer is you keep your receipts forever.
Right.
Okay,
Yeah.
right. But that's written on a set of books, and it doesn't really apply. So we do what's manageable. A similar question that people ask, if they keep the receipts, can they throw them away after a year, after 3 years, after 5 years, after 7 years, whatever. So my answer is keep them as long as practical. If you have a business that generates a lot of receipts, you have a restaurant, you've got your receipts that have come in every day for all the meals. It's mind-boggling how many receipts get generated for a business with a lot of transactions. They should keep summaries of the receipts for reference, because if there's questions, people are going to ask about the summaries. But if they need to describe the receipts every year or every 2 years, that's practical for them. And they have a lot of receipts. Other companies I work with, they only have 12 or 15 receipts a year. It's not a big deal to keep 15 receipts in a folder for 3 years, 5 years, or 7 years. Typically, if the IRS has a question, they're going to ask within 3 years. If they're delayed and they start a conversation, and that leads to another conversation, that leads to another conversation, they might have questions that go back 5 years. But almost never do they ask for detailed stuff beyond 7 years. So my advice is do what's practical. If you can keep the receipt for a year or 2 years, yeah. But when you need to throw it away, certainly, you don't need to be renting storage space in the facility with, with cases and cases of paper. That's not practical. A good question.
There's a couple of online questions as
Okay,
well.
yeah.
Kimberly asked, when do you need a bookkeeper versus just an accountant to help with taxes?
Okay, so that's another common question. That's a good question. And it's unique and specific to everybody. So that's a question she could ask her tax preparer. If the tax preparer is comfortable with the information that she's providing every year, and it doesn't take her too long to do research and answer questions, then she can probably wait for a bookkeeper. Usually where a bookkeeper comes in really helpful, you're working with your tax preparer, the tax preparer says, I don't understand this number, I don't understand that number. They ask you to do the research, and it takes you a week or 2 weeks to do the research and find the answer. That's probably a sign that you could benefit from working with a bookkeeper. And I will say that a lot of times people don't work with bookkeepers because they don't want to work with somebody, every month. And it is more expensive to have an extra bill to pay every month. But a lot of bookkeepers, including myself, they're happy to work with people like once a quarter. So that's 4 times a year. You can do 3 months at a time, or just at the end of the year to help prepare for tax season. November, December, they can go through all the statements. You just work with the bookkeeper once a year. It's called like a cleanup, a bookkeeping cleanup. And that helps you get everything in order to give to the tax preparer. And that's the way when the tax preparer has questions, because there's a cleanup done, the person kind of has a good sense of where all the information is. Because if the bookkeeper will have the same questions that the taxpayer has. So if the bookkeeper asks the question first, they've done the research, and they get to tax time, and the tax preparer asks the same question. You've already seen the question, you've already looked at that information, you're already prepared to answer that info. And anything else online?
Kimberly, did you have any other follow-ups to that?
Well, my other question would be, we're doing like regular quarterly filings, and it's sort of super time consuming. If you were to have a bookkeeper, I know there's a very difference in pay between a bookkeeper and a CPA. What's that average difference, if you could help me? Because I am currently looking for a bookkeeper, and I'm not sure where or how to start. Like, do you go to your bank? Do you look online? Like, where do you find these people?
Yes to everything. You can go to your bank. You can go through the Chamber of Commerce and ask anybody if they do bookkeeping. Everybody here is welcome to follow up with me. For short questions, I can give a free 15-minute consult. But if you actually need help and work, we start with 15 minutes, and then we can review the fee structure. But to get you to your question, there's no average. CPA offices, it costs a lot of money to be a CPA. It's a lot of training, and they work with a lot of complicated returns. So they're structured, their fees are higher. They usually have a building. They might have a big building. They might have a prestigious building on the water with a really nice view. That all has to be paid for with fees that their clients pay for. Bookkeepers tend to have less structure. They either have small offices or they just work from home. So that's how their fees are less. That's how they're able to charge less.
There's quite a few online folks that solicit to help with your bookkeeping needs. How do you feel about that? Is that like a service you can trust from a distance like that?
So everybody's comfort level is different. If you do a lot of stuff online and you're comfortable with an online relationship, I actually have clients' online relationships that I've never met. So it works. And if you move to an online service because it's less money, then that's your choice. There is definitely a benefit to having a local preparer that you can meet for coffee, you can meet for check-ins. We live in a more expensive area of the country. So a bookkeeper, in Boston or North Shore might charge, more money than you know, in Tennessee or Alabama or Texas. You did mention another thing that you said you do quarterly estimates and quarterly reviews. That's another good trigger where it might involve getting a bookkeeper, because a bookkeeper can help you revise those estimates, particularly if your income and expenses is kind of all over the place. You really don't know. If your company's consistent, you know, year after year, you pay $1,000 an estimate every quarter, you know, it's probably going to be the $1,000 next quarter and the quarter after that. But if there's a lot of fluctuation, if you owe more money, you should pay more money during those estimates. And if there's a dip in your business, something happens in the economy, you shouldn't feel like you have to pay, you know, the same estimate that you did last quarter if you had a drop in business. You only have to pay estimates on the income that you've earned. Okay? Another question?
Yes, I have a hard time wrapping my head around a CPA versus a tax preparer versus a bookkeeper versus just an accountant, as well as like a business attorney for the interplay of business entity structure and formation and tax ramifications that coincide with that.
Right.
Can you kind of give me a Reader's Digest version of all of them and what like that interplay is?
Sure.
Great
I'll try to.
Okay.
Again, this is a long topic.
Yeah,
You could spend an
sorry.
hour on it. But if you're creating a company and you want really good LLC paperwork, and you think you might eventually grow into an S corp, you want to hire a business attorney, a corporate attorney. They do this every day. This is what they do. They don't do real estate transactions. They don't do divorce. They set up business paperwork every day. And it's especially important if your business has multi-state operations, because those LLC paperworks, it can mean different things in different states.
Right.
So I've worked with a couple of clients that have actually developed their own LLC paperwork. They don't want to pay an attorney. You can do that. And if you're just mowing lawns or, you know, an ice cream stand or something like that, it's probably okay. But you really want to work with a corporate attorney if you're forming new companies, multiple states, and you're doing a C corp or an S corp.
And would that attorney though be able to opine as to the tax ramifications of that specific entity?
They probably could, but chances are they won't. Okay, they get a lot of money, they get a lot of premium for writing up the LLC paperwork. That's what they want to do all day. To be honest with you, tax preparation doesn't pay as much as an attorney would earn, so they'll go to a CPA. All right,
Okay.
and a CPA has a lot of experience with working with S corp, C corp, partnership, and LLC entities. These are more complicated structures that, quite frankly, if you're complicated in multiple states, it's probably a good idea to go to a CPA.
Okay.
Okay, all right. Full disclosure, I'm not a CPA. I'm an enrolled agent with the IRS. Now, CPAs, they focus on tax preparation. They can do bookkeeping. There's fewer and fewer CPAs doing bookkeeping these days because, again, bookkeeping doesn't charge a lot. They'll usually just recommend, or they'll have some referrals like, hey, I know a bookkeeper who can do this or that. There are still some CPA offices that do some bookkeeping, but it's mostly just for their favorite clients and clients that they've had for a long time. To be a tax preparer, really all you need is a P10. So you don't have to be an enrolled agent to prepare taxes. It's recommended that you are an enrolled agent. Usually the enrolled agents, they charge more money than, you know, someone who's not an enrolled agent. But there's more experience and there's more services that an enrolled agent can provide than a non-enrolled agent. And then bookkeepers, they usually have some kind of certification with QuickBooks or some other accounting, but they tend not to be registered with the IRS. And a lot of bookkeepers are part-time business. So they just do it, you know, 10 hours a week or 20 hours a week, and they're doing something else during the week. They might be a schools teacher. It could be selling real estate. They might have family obligations. They're taking care of a family. They just tend to do books on the side. So, a good question. More questions? We've got roughly five minutes left.
There was another question online. How can we keep our categories consistent and how to properly label expenses or purchases? Is there a recommended way to do this?
I'm so glad that you asked that question. I was thinking about putting an extra slide into this, but again, this could be like a 1 hour topic. You want roughly 10 categories. Okay, 20, it gives you more information when you're running reports, but 20 tends to be confusing, right? 4 or 5 categories might not be enough. So, and some categories are similar. So, when I'm preparing books and doing taxes for a new client, I'll see things come in for office expenses, and then they pay monthly for online stuff. So they might have a monthly fee for Adobe, they have a monthly fee for Microsoft Office. They might do other things. So I tend to group the category office expenses and software into one category, just so there's not two, it's just one. But that it's a personal decision. Some people say, well, what are the right categories and what are the wrong categories? There are no wrong categories. You just want to use categories that you can talk about your business comfortably with a bookkeeper or with a tax preparer. And sometimes people put transactions kind of in a category that doesn't really make sense to a tax person or a bookkeeper. That's fine. You know, it comes in a conversation that bookkeeper might say, you know what, I recommend you put that transaction in another category. That's fine. It's you and the bookkeeper getting on the same page. As you know, it's still deductible, it's still an expense. But I would say if you have more than 10 categories, there's probably room for consolidation. If you only have 2 or 3 categories like business expense and personal expense, you probably need more categories. Yeah. And actually, just on that last point, I'll say the major ones are automobile, office. Automobile and office are 2 big ones. And then utilities, rent, and payroll. These are actually things that the IRS has triggers on. They have computers that run algorithms. And if your payroll is all over the place and your rent is all over the place, that might increase your chances of getting an inquisition letter or an official audit.
Question to that?
Yeah.
So would your income categories match your expense categories? Or are you talking 5 and 5?
I'm talking all expense categories.
Just expense categories?
So yeah, one income category is sufficient. If you want to lump all of your income in one category, you can. If you're a landscaper and some of your business is actually mowing lawns and some of your business is designing gardens, and just for your own purposes, you want to know how each of those segments are growing.
Yeah.
That's for your own purposes. You can have 2 income categories, but you only need 1. And actually, when we do taxes, we just put 1 on your tax form. There's just one.
Yeah, but depending on your business, you might want to separate it.
Yes, and that's for management. So doing books isn't just for tax time. You actually want to manage your business. You might want to grow a portion. You might think some portion has grown more than others. You're going to run analytics. So you're going to want multiple categories for your own managerial purposes. Yeah. Good questions. I think we have time for one or 2 more.
Let's see, as far as, if you've always been a Mac person and you show up, is there a bookkeeper that might prefer, is there an interactive thing that happens with, how to keep records?
So, the short answer is no. QuickBooks works with a Mac. If you're using, you're probably aware of that. And if you've done your own taxes, you can get a Mac version to download software and do it on Mac. I can say that the software developers, they spend 95% of their time testing on a Windows system. So there might be more bugs in a Mac version of software. It's just kind of the way it is. And when I get files from a Mac client, Typically, what they do is they put everything in a folder and they just send me the MAC folder. And that tends to be a little bit more work for the tax preparer. I think people aren't really that, they don't understand that just sending a whole directory of files and stuff, takes a little bit of work to sort through. So I prefer my clients to send me the individual files, and that takes the operating system out of it. But if you're not sending MAC folders, it shouldn't really matter. But you want to make sure that your information gets to the bookkeeper and gets to the taxpayer, that they can see all the files, that they can actually open all the files. Sometimes I'll get a file from a Mac user and it's a Mac specific software and there's no equivalent Windows version. And I tell them I can't open the file. And sometimes it happens with PDF. They'll send me a PDF document that some software on their Mac created the PDF in a special format that's not readable by all PDF readers. I have to have them either resend the file or actually fax it to me, send a physical copy.
And just one more, capital gains, I can't really keep track of it. It is a level in general of business. However, owning a multi-use property, keeping paper receipts, I always ask for paper receipts when I'm engaged. And so going back, like even an 18-year ownership, if I kept all these tax filing things, and I do use a bookkeeper when I file taxes, do I go and any repair on the house, anything, do you pull them out and destroy the things that, CVS for, soap and things like that? Is there something, a guide for capital gains receipts keeping for the long term?
Okay. So if you want to follow up later, you can. You said things are a little bit confusing. So you said capital gains and receipts.
Right.
Those two don't go together.
Okay.
Capital gains is usually associated with financial instruments like stocks and or if you sell a business, there's a capital gain. There's not going to be a capital gain throughout the life of the business. The capital gain's only at the end when you sell the business. So there's no receipt for a capital gain.
Well, if you did sell the house, like
Yes.
the business is the house.
So there's a 1099 when you sell the house. There's a 1099-S form.
Okay.
And if there's multiple owners, each of the owners will get a 1099-S form, and it is an important form if you can get it. There's a lot of houses that get sold, and sometimes the attorney forgets to generate the 1099-S. And if it's just a simple residence being sold, it's not a big deal because it's recorded in the book of deeds. The tax preparer can still file the paperwork. But if it's held in a trust and it's a more complicated sale, then the 1099 really becomes more important.
So just a follow-up question there. My understanding, this could have changed from taxes, is that if you're a homeowner and let's say you buy your house at $200,000 and you sell it 20 years later for $600,000, if you have saved the cost of the fence, the cost of the pool, the cost of the lawn mowing, all that kind of stuff, that can come off your tax basis because it is still part of your expense at the end.
Right.
But you would have to have the receipts for those, would you not?
No, you don't have to. In a perfect world, yes.
Okay.
In a perfect world, we have the receipts. Do you need the receipts to file your taxes? No.
Yeah, but how could you prove that you spent another $200,000 over
You don't
20 years?
need to prove.
You don't need to prove.
You don't need
Just
to prove to
guess.
file your taxes. And oftentimes you have to guess, because this is a real world. And as she mentions, in an audit, they will ask you for that paperwork.
Right.
If you can't provide the receipt itself,
Yeah.
they will say, is there anything else that you can show, like a bank statement?
So you have a record though.
So you have a record.
And I think that is what Jill is asking. Yes, you
Yes.
need to keep a record.
Yeah.
So if you keep it monthly, it's better, because even if you lose the receipt, there's a line item that you spent this,
Right.
especially if it's consistent, right?
Right.
Because I've heard that after 7 years, you can throw it all away.
That's a common thing.
Yeah.
Just realize that the IRS wants you to keep it forever.
Yeah.
But the chances of the IRS asking for a receipt after 7 years
Okay.
is 0.0003.
Unless you're in that
Right, right. So they are, let me also put this, if the IRS looks at your return, they start doing an investigation and they find fraud, then there are no time limits.
Yeah.
So if, in the instance of fraud, they can go back 20 years, 50 years, 100 years. And for people that need to go, I appreciate you coming.
Thank you very much.
Thank you. But there's no time limit on fraud. So, and your tax preparer, they need summaries. So a lot of times I get, clients will send me in, they'll send me all the individual transactions. And I'll reach back out to them and say, can you please add it up? If I add it up, I'm gonna charge you for the time that I do it. So the tax preparer just needs the summaries. You wanna keep the receipts so that you can answer questions. So the receipts are for you.
Yeah.
You can answer questions to the bookkeeper, you can answer questions to the tax preparer, you can answer questions to Massachusetts DOR or IRS. But, so you just want to be able to answer the questions. The receipts are really for you. If you can save all the information and answer the question without the receipt, you don't really need the receipt. Yeah, I think that's all the time we have
There was
today.
one more quick question.
Well, okay, one more
I don't know if it's
question.
quick, but on a P&L, is it necessary to include depreciation?
On a profit loss. So the profit loss that you provide to the tax preparer does not necessarily have to include depreciation on it, because the tax software will calculate the depreciation. So I have some clients that include it, some clients that don't include it. Usually the clients that include it, it's calculated wrong. So it's nice that they went through the effort and they tried to calculate it, but if depreciation is a complicated topic. It's complicated for each type of asset that you have. And every year they change the depreciation rules. This year included, they changed the depreciation rules again this year. So a lot of times when you calculate the depreciation yourself, you're just doing it wrong. So the short answer is it's not required. It's nice to have, but a lot of times it gets ignored when a tax preparer is doing your taxes because we're relying on the tax software to be correct. Yeah, but good question. If I did share my information earlier, so hopefully you have that. I do have cards for people that are here and want a card. If you have questions online, you just want to reach out to Colleen to share my information. Colleen, you can provide my email, phone number, anybody that asks. I want to thank everybody for coming today. Have a great rest of the day. And if you do have questions beyond this, I will talk to you more.
Thank you.
Thank you.